Manish Sonthalia, Senior Vice President and Head Equity Portfolio Management Services, Motilal Oswal Asset Management, joins us on the show right now. Manish, hi, good morning. Seems like the market doesn't want a budget at all ahead of the Brexit vote outcome.
Yeah, we'll know the outcome of the Brexit polls by tomorrow noon, India Standard Time. So till that time, it may be, just be muddling along till that time. So obviously tomorrow is going to be a big day on either side. Chances of which are that they would remain in the Eurozone. So we'll have to abide some time, we have to abide some time till that event is over.
Yeah, but indeed, if at all it is a Remain, at least that is what some of the initial polls seem to be indicating, and the bookies as well seem to be betting on that one, that, Britain chooses to remain with the EU. Could it really open up that much upside to the market, or is it something which has already begun to be priced in world markets?
No, I don't think the thing is whether, what sort of an upside is there if Remain happens. The point is that there is going to be a risk on trade, and India's specific factors would matter more than global factors at this given point in time. Obviously, this event is very crucial, and so markets may tend to move up in a hurry because India's specific factors are falling into place. If we get decent rains, then keeping Brexit aside, we should be actually seeing a whole lot of risk on trade and markets moving up in a hurry.
So if markets fall 5%, 7% because of Brexit or because of global factors, would you be a buyer there, or you would let the dust settle down, you would assess the situation, you would like to dissect the impact of what will happen to currency, European Union and the growth there? I mean, what I'm trying to understand from you that if markets fall tomorrow by 4-5% and if individual stocks come down by 5 to 7%, will you be pressing the buy button?
So we are always prepared for a 5% correction in the markets due to any specific reasons. If the correction comes due to Brexit, so be it. We'll be buyers, and we are not buying the entire markets. We are buying individual stocks, most of which will not be impacted by Brexit or Remain. So if that be the situation, we'll be able to buy at lower levels. So I would definitely be a buyer at lower levels.
Manish, we were just speaking to an IT company. They don't have any exposure, of course, to the European region. But he mentioned that there will be so many factors that will impact the IT space if indeed Brexit were to happen. There is an impact on the currencies, which will not be just a single day phenomenon. It could last over a period of 3 to 6 odd months. A lot of companies will have to readjust. That might actually increase the outsourcing opportunity for certain IT companies which have a presence there. So how do you approach investing in this difficult pack? Because I would reckon that if there is Brexit, there could be an initial knee-jerk reaction on the IT stocks any which ways.
Yes, that would be the case, and guys who are more exposed to Europe and Britain, in fact all of them are exposed to Europe and Britain, will have to readjust their business opportunities in these regions and adjust for currency factors, and that would have an impact on what should be the growth rates for these companies on an overall basis over the next 1 to 3 years. And keeping that in mind, we'll see EPS upgrades or downgrades. So there is a bit of uncertainty in the IT space. I agree with you totally. So the best possible situation for this sector is that Brexit doesn't happen.
Let's talk about your positioning, and for a market commentator like me, if I look at your portfolio, nothing really changes, and that's what the attempt is, that you don't want to make too many changes. But what has happened in the last couple of months is that your large holdings have become giant holdings, whether it is HPCL or Bajaj Finance. So what are your thoughts there? I mean, are you looking at trimming some of your giant holdings?
See, we just exited out of Max Ventures as one of our positions in the mid-cap portfolio because obviously we got the shares of 3 different companies when we bought into a Max India Limited when they were combined. So that is the only change that we have made in the portfolio recently. coming to your point on some of my giant holdings, they would continue to become even bigger from these levels as far as my understanding goes. Because at the end of the day, market capitalization is a function of profit growth, and these companies will continue to grow at 18-24% CAGR for the next 3-4 years. So obviously prices to book for Bajaj Finance may not be the right metrics. Continue to value them on a price to earning basis, and even at a 25p on a current year basis, which is FY17 basis, not overtly expensive if you were to value it on a price to earning basis. And if the earnings growth is 20-22% for the next 3-4 years, I think market capitalization over a period of time should be going up only. And same is the case with HPCL. It's not very large market cap. Obviously BPSCL is much bigger than him. But gross refining margins are pretty stable at $4.5-5 for this year. We are looking at no inventory losses compared to last year, and the return on equities will actually improve from single digits to high double digits. So that is still not reflected in the P multiples of an HPCL. 5.5-6 times is just not the right valuation that this company should be getting. At least a low single digit or high, slightly higher double digit multiples is justified, which leaves upside even from these levels.
Manish, a very interesting position for the longest time you've had is Bosch, and again, without really getting into a stock-specific comment here, I have a larger theme which I want to discuss with you: emission norms and stricter norms for diesel cars. Now, Bosch is catering to diesel engines. If in general, if emission norms are getting tighter, diesel engines will come down. Do you think a company like Bosch will suffer?
At the same time, we are hearing a new scrappage policy. So how are for trucks and all? So what are the trucks going to be made of? Petrol engines. So I mean, it's okay that a few states are taking a tough stance on diesel vehicles, but diesel totally getting banned in this country seems out of place as of now. Of course, we'll have to see how things play out, but that's more of a wish rather than what can be practically possible. Yes, if diesel was to get banned totally in this country, all vehicles, then we'll have a problem in Bosch, but doesn't look like that there's anywhere that sort of a situation getting played out.
Manish?
And the opportunity is going to be there. The emission norms opportunity is going to be there till 2020.
Okay.
Okay.
Sure. So that's a long frame. Manish, my final question to you before we wrap up this discussion. You have a very strong handle on telecom. I want to talk about the tower companies, if you have a thought here, because Bharti Infratel has consistently been logging in new lows, now trading at fresh 52-week lows as well, and lots happening in that pocket. What do you do here with Infratel or with the telcos?
I mean, till Reliance Jio comes out and launches its products, and yesterday we had a draft consultation paper on VoIP, put up for discussion. Obviously, these are going to be tough times for telcos. Incumbents, new players, marginal players. It's a tough industry to make money in, and obviously the stock prices are reflecting all of that.
That says it all. It's a tough industry to make money, and if that is so, it's probably a tough set of stocks to make money out of as well. Manish Sonthalia, so good chatting with you today. Thank you so much for being with us and giving us your thoughts. So if that's what you should do and the spaces that you should focus or not focus on, I think the key question, of course, is what happens if there is Brexit or if there is Remain. Alistair Newton, he's co-founder and director, Avalon Business Advisory, joins us right now on the show. Needs no introduction, quite frankly.